Hey everybody, it's Mike from Orderflows, and in this video I'm going to talk about a way to use volume profile that is kind of underutilized. People always ask me, what else do I use in terms of technical analysis besides a volume footprint chart? And volume profile sort of lends in well with order flow. And the problem though that I have with volume profile is, you know, most softwares start it from the beginning of the trading session. And, really when I look at volume profile, I like to anchor it from important moments in the trading day, right? If you're familiar with Brian Shannon, he talks a lot about anchored VWAP, right? And that's a very useful tool as well. But I like to use volume profile and anchor it in sort of in the same concept. Now, again, I'm not the one that invented anchored profiles. I'm not claiming to be. But it's a way that I use volume profile as opposed to looking at the whole entire day, because, once a number comes out or the Fed does something, everything changes. And oftentimes, it's really going to be in your better interest to sort of disregard, what happened earlier, right? For example, this past Friday, we had that number that came out and obviously the market dropped down, right? Then the market rallied back up and then it sold off late in the day. And if you're using a volume profile that started, from the beginning of the session, here, what was happening, all up until this time period is sort of irrelevant. I want to be tracking what's happening, since this big number came out or since an announcement came out or, some political event happened, right? And really what I'm going to be looking at is, swing highs and swing lows, or literally from the time the event happened. And there are tools out there that you can use. Now with my order flow software, I don't have this tool built in. I've been working with Ninjacators to build a bundle of their tools that is helpful to traders. And one of them that they have is this dynamic volume profile, and it's part of this series. The link is below in the comments section. It's part of their Institutional Edge series, dynamic volume profile, right? You can see I already have it on there. So what it does is it allows you to draw a volume profile from a particular point in time, right? This is when the number came out to the cash open, right? You want to see what the volume was. Look at this, right? From the time of the number, market dropped to the cash open, basically right here. This is what, 8:33. I mean, you could go back 2 minutes here, 8:31. Okay, I've got a couple of levels here. You can see value area high, value area low. That's this line right here. This is the value area low, this is value area high. This is the point of control. What I'm going to be looking for is to the right side of the market. And you can see the market went up, went above the value area high, traded back into value, and look at where the market came down to. It came right back down to that point of control right here, this bar, right? And then it shot back up. Imagine if you know these levels, beforehand, you just drop a bid in there saying, okay, if we come back down here and test this point of control, or we test the value area low, I want to be a buyer, right? Or, if we're going to break out through the value area low, we already broke out to the value area high, but if we're going to come back down and test this value area low and break out past it, maybe I want to be short. But again, you could anchor it from, any significant point that you want, right? I mean, for me, the most obvious are the cash open, the 7:30 numbers that come out, the high or the low, or swing high or swing low. So, if you were to anchor it from the cash open here, so this is NASDAQ. This is a simple 1 minute chart. I'm using this bar chart instead of an order flow chart because I could put more information. Here I just basically want to show you. This is from the cash open to the first swing high, okay, right here. Obviously the high of the day is higher, but I'm just looking at it from the cash open. The number came out at 7:30, cash opens at 8:30. It's the most active time of trading. This is when everybody is making their decisions based off of what just happened in the market in terms of the economic number. You can see this line, this black line right here. This is the point of control. Let's just extend it out. Right, you can see how the market came right back to that level. Got within a couple of ticks, bounced back up. You're talking, around 27 and a half, 28, all the way back up into the 60s, right? I mean, to get to the 70s. Finally, it broke out of this value area low over here and kept selling off. We did make a little higher high over here. Point of control, more or less the same price. You can see how the market came back down to it, right? And, you had that other high over here, but this was the higher one. But even if you draw that line out there, right? Again, that point of control is still holding that same level, right? Anchor it from the place. Okay, so I mean, that's NASDAQ. I mean, let's take a look at some other markets. Let me just remove this one. What else we got? Gold. Gold's a great market. Gold, very interesting. Yeah, the number came out, boom, market went ballistic. Then went sideways, tested the low, and then you tested that high again. Okay. From this low, what was that, about 9:23 in the morning to the swing high. Okay, what do we got? We got up here, this is the profile. It's kind of this P-shaped, right? You value area high up here, value area low down here. You've got your point of control up in here. Okay, it's sort of bunched up near the high, but I got this area, this target down here. Okay, point came down off the high, tested the point of control, went back up to the value area high. Now it's testing the point of control. It's breaking. Well, where's my target? Okay, well, I got this area down here, this red line, this value area low. Okay, draw that line in there. Look at this. It's trading back and forth late in the day, 3 o'clock in the afternoon. Came within like a tick or two of that level and bounced back up. We'll see where it's going to open Sunday. It'll be interesting to see how that develops. But again, this is sort of the power of different ways of using volume profile, right? You don't have to take it from the open of the day, right? Let's go back here, right? If you were to draw it from the open, okay, where's the open? Right here. Okay, so basically you're drawing it from there to here. Well, that's the high up there. If you were to draw it there, he's giving you different levels completely. Yeah, it did come down to that level right here. This point of control, right, bounced up a little bit to the value area high, came down, dipped down again. It just gives you more levels, right? I mean, that's what trading is about, is seeing how markets react around levels, right? I mean, there's no law that says you have to use it from when the future's open, right? You could use it from any point in time. And actually, your starting point is kind of irrelevant, right? There's people that use 5-day profiles. There's people that use monthly profiles, etc. Right? It's up to you as the trader to use the what do you want to call it? Right? The way you find your levels is a very intimate thing. Let's take a look at another market, crude oil. Okay, crude oil. Obviously, wait, let me get crude here. Get the crude chart. Crude oil, interesting market as well, right? It's a lot of times it's all up and down, all over the place, right? You can see on Friday 70, basically 72.80 high, 70.20 low. But let's just go back to some of these movements. This is the high of the day here. Just draw that line from the high. There's the high here to this low, swing low. Okay, where does it come back to? Right, here's your value area low, here's your value area high. This is your point of control. Right, you can just see it just came within a couple of ticks here before selling back down. Now, again, you can take it from swings. I mean, if you were to hold these levels, you could see it even came back right up here and then sold off. But you could even take it from swings, right? This swing low up to, well, there's a swing high that made a new swing higher, swing low. This swing high here, right? You can see where's the value area high here. This is the value area low. It's sold off from this high down to the value area low, more or less. This is 17, did get down to 99 before it rallied back up to 65, where your value area high area is up in here. Okay, you can even draw it out. Then once you've made this as your swing high, since cash, well, the equity cash open, you could trace it down. Watch it as it keeps going lower. Right, we made this new swing low here. Okay, yeah, nothing much. Your point of control was down here, but your value area high was up here, value area low is here. It's interesting, your point of control came in below your value area, which is a bearish sign, but then you made a new low right here. Okay, what do you got? Right, market rallied from your low up to your value area, what do you call it, value area low, and then it sold off again, right? So I mean, there's just so many different ways you could use it, right? It's not about one way of using it. You could anchor it from important swing points, right? If you determine your own swing levels or reversal points, right? There's a reason why a market reverses. Things in the market change, and so sometimes you want to focus on what's happened after sentiment in the market has changed. And most obvious ones are numbers, Fed announcements, or if there's someone from the Fed is speaking in front of Congress or something and says something. During the course of the trading day, there's different areas on the chart that you can draw an anchored volume profile from, just as you would draw an anchored VWAP from. Okay, so there's no one fixed way to use it, right? It's flexible. That's the beauty of it. It's a flexible profile, and you want to be watching where the volume is forming after something market affecting hits the news wires or hits the market, and gets people to change their thoughts of what's happening in the market. So again, if you're interested in this tool, it's part of that Ninja Caters package that become involved with. It's the institutional edge system. There's actually a bunch of tools in here, which you'll probably see some more videos on in the future. One of the ones that I like, obviously, is this real-time supply and demand. It's quite a beautiful tool, for finding market support and resistance. To me, this one is worth the price of the whole package altogether. It's an expensive package, don't get me wrong, but it's there's like 30 tools in there, and the beauty is you can use this with order flow as well, right? This is a footprint chart. Again, if you were to draw out a profile, from this swing high to here, it's giving me an area, right? I can see in here this profile from the swing high to the swing low, where I think, I can see where the volume is forming. Obviously, I can see that in the point of controls in each bar, and I can just watch it as it's trading, back up towards those levels. Okay, so I hope you guys enjoyed this video, and I'll see you guys on the next one. Bye-bye.